Hello traders, welcome to marketaddiction.net. Today is Wednesday, March 4th, 2009. We had a pretty decent update today in the markets. The Dow was up 149 points, the Nasdaq was up 32, the S&P 500 was up 16 points. It's probably just going to be a short video just to recap the market action. I don't have any new stocks on my watch list for tomorrow. Starting off with the daily chart of the S&P 500. Not a lot has changed on the daily chart. Long term, we're still in a downtrend. We're still below last year's lows. We have this 50-day moving average pointing down. We have the 10-day moving average below the 20-day, below the 50-day. Zoomed all the way into the 10-minute chart. I posted on my blog that it looked like we was putting in some higher lows, some higher highs. I had pointed out this level being a key resistance area that we needed to break through. We came up to it in the morning, got a little bit of a pullback, and then a strong rally in the afternoon. But then we had this sharp sell-off at the end of the day on some high volume. This rally brought us almost up to 5-day moving average and right to this previous level on a gap down we had a couple days ago. So this was a resistance area. I didn't really like the sell-off we had in the afternoon. It was a pretty fierce sell-off, but doesn't really hurt us too bad though, because we still have this higher low in here and we have this higher high. So we could easily rebound tomorrow and get another push up. If we do get above this 5-day moving average, things could look a little more constructive for the upside on the intermediate term time frame. But it's probably going to take some work to get us up past there. So I'll be looking at this level, today's high, and this level here. If we get a break below this level, we could see some further selling and just go back down into this range. And if we do get another leg lower, the target on the downside would be, well, you'd have to go way back to not even a weekly, but all the way back to a monthly chart to find any previous levels that may act as some support. I don't even know if my charts go back that far actually. So really this market is just badly damaged in here. Basically what I'm going to be doing is looking for this upside move to exhaust itself and then look to enter some more short positions. This here is a 60-minute chart of the S&P 500. You can see we have this longer term trend line here that we may come up and try to touch. You can maybe even look at Fibonacci and say that we could come up to this 38% retracement. The 50% retracement would be a key level in here, as it looks like it was hit a couple times. But these are all just potential levels that even if we do get a rally, we wouldn't see these for a while. But just to give you an idea of how far down we really are, rally all the way up to this level. Let's see, on the S&P, this would be the 780 level, and today we closed at let me see, what was our close for today? 712, right around 712. So that'd be a real big rally, and we'd still be an intermediate term downtrend along with this long-term downtrend. So basically I don't have a very high hopes for this market, for the upside, for anything that lasts more than just these quick rallies. And the way my trading style is, I don't really feel too comfortable taking long positions here, because just as a sell-off at the end of the day shows you that it can reverse very quickly. So that's basically what I'm looking at. I'm probably going to be on the sidelines until I see this short-term uptrend we have here exhaust itself and start to roll back over. As soon as it looks to put in a lower high and then break below that level, or break below a previous high or low, then I'll look to be entering some more short positions. I do have a few stocks on my watch list for tomorrow. If you want to check those out, visit my website at marketaddiction.net if you're just watching this video on YouTube. Be sure to check out the links on the side. Stop back and have a great day.